right, testing. Can you guys hear me? If anyone is there. See a couple people. Don't know if the chat is working, unfortunately. If you can hear me and you're in the webinar, and you've been chatting something, it might not be popping up for me. If you guys could send me an email to let me know, because I should be able to see you guys chatting, but I don't see anyone chatting. So, let's see if I can test in the chat. Test. If you guys can hear me, that's good. The problem is I don't know if the chat is working. Because if you guys are saying something in chat, I don't see it for some reason. All right, there we go. I see somebody. The chat might be working here. A few more people say something in chat so we know we're working here. If you guys can hear me, say something in the chat. Make sure we're working. Cool. Yeah, Melanie says it's working. All right. Well, I'm just going to get started. If the chat isn't working for you, feel free to send me an email, and I will either read your question from the email, or if you get the chat working, type in there. So we'll get going. So I think I'm just going to start off going over my trades from today, and then we can go over any questions. You can question about your particular trading, about my trading, whatever you want to go over. Your personal trading journey, my trading journey. Pretty much everything is going to be open on the table here. So, and we'll just do this for the next hour to hour and a half or so. Make sure you guys want to make sure all you guys' questions get asked. And yeah, let's do it. So today I only had two real trades, with the trade going overnight. So the first one was NLST. I've been trading this for a while now, over the past few weeks. I had a great short on it, the 6th to the 7th. Let me particularly go over that actually. because that was probably my biggest win on the month so far, which is what led me to trading it today, but then it actually resulted in a loss. Um, so something for me, I love like shorting very, very overextended stocks. If we go back to the daily chart, we've run from $2 all the way up to almost $6 on the high of this day. So that's 200% just a couple days. Usually stocks like that, are due for a pullback, are due for a red day, are due for a sell-off. And so along this day when we were super weak, I actually started shorting, thinking that we would go red, but we actually held it. We held like the $6 level or the $5 level, which was yesterday's highs. And then I got squeezed. So I took a loss there in the morning. But then we started just kind of pulling back more. And I remember taking another short here. And unfortunately, I actually had to go on a road trip with my family. So this was a very unique situation where I normally wouldn't be trading, but I figured out a way to link my broker to a mobile app. So because of that, I was actually able to trade on my phone, which is something I've like never done. I think I've taken like 3 trades in my entire career off a phone, and this would be the third. So I was watching in the car, risking the highs. Had a short position in the mid to low fives. Added into the close, I believe on this crack, and then on this crack, all while still in the car and on the phone, which is pretty funny. And then the next day, it actually panicked right out the open. So I did short overnight. I held overnight, mainly because like it didn't hold over, like it didn't close near its highs at all. Like it actually closed right at its lows, right at its day lows, which is super bearish. It's certainly not a strong sign for a stock. So I held short overnight. It panicked out the open. And then I covered I believe I had a 440 average cover. So really in these dips, that's where I started covering. And then I left it alone the rest of the day. And thank God I did, because it actually squeezed back, and which is what kept it going into this run that we now have seen here. And so I was thinking the same thing again, where, back to the daily chart, we had our pullback, but we really didn't have a red day. Like we had a red candle, but we never like had a red day close. So we just kept going, right? We go another green day, another green day, another green day. Before you know it, now we're up to $7. So from 2 to 7 in like 10 days. So I'm thinking it should offer a similar opportunity as it did on the 6th and 7th of July. And so once it started like cracking here, again, another hard sell-off, I started getting interested in shorting. I believe I started shorting to these bounces. Unfortunately, this little squeeze back near highs kind of scared me. I didn't stop out, but I was pretty close to doing so. But then as you can see here, we stayed in this range the rest of the day between $7 and $7 and like 670, 680. And so I didn't want to cover until it picked a direction. In my eyes, I want to see this thing break over 7 before I cover. And if I'm right, it should break below 670, and I'll profit hopefully. So I held short overnight again. I think I had like a 680 average. So unfortunately, I had an average like in the bottom of this range, but I was risking 7s. My risk wasn't too big or too wide. And then come out the next day, we actually had a really nice gap down, which is really, really cool. Unfortunately, I got greedy and didn't cover any. I was kind of thinking, because we were still so extended, because we still we haven't yet had a red day, I thought we should be selling off to at least $6, maybe even below $6, back into like the mid 5s range. So when we only panicked to 620 here, I thought to myself, like, we have much lower to go. Unfortunately, that was like the best price I could have gotten in terms of covers that day, which I didn't take any of that. And then I remember adding into these two pops right here, and then it just went sideways again. And for some reason, like, this is not how a red day should act. Like, as a short seller, this is not the type of action I like to see at all. And so finally, when we started uptrending here, perking midday is when I finally just took it off for a small loss. And then late day, this is my last trade on it going into the day, is that it actually held red. So the red-green level was like 692 or something up here. And this entire day, we never touched that level. And so for the very first time in like 12 days since the run-up, we actually closed red, right? We were actually down, I think, 2 or 3% on the day by the close, right? Because every single day, whether it's a green candle or a red candle, we were still closing up on the day. Whether it was up 1%, 10%, 20%, the stock had closed green every single day, or was up every single day, besides this very last day yesterday. And so I thought to myself, like, okay, even though it didn't work in the morning today, it is closing red for the first time. This hasn't happened literally two plus weeks. let's short overnight one more time and give it a shot. Now, unfortunately, that did not happen. Didn't work out. We actually ended up gapping up and then spiking over 7. I cut it over 7 in the morning right here for, I believe I lost like 5K, which is not a terribly big loss for me. It would have been a big loss for me years ago, but fortunate enough to have a much larger account now to where losing that much is not a big deal. And then the rest of the day, we just hold over 7 pretty much. And I decided to, and because it's been such a difficult short the last 3 or 4 days, I decided it's probably a better long. Like if I had just gone long every time I went short, I'd be up 5K, right, instead of down 5K. So I thought to myself, okay, it's not breaking down. It keeps heading higher and higher and higher. It's closing right at its highs, above the breakout level now of 720, the previous all-time high of the run-up. So I did take another long position overnight. So I'm constantly, and I think that's a good lesson to be very flexible for someone, if you know how I trade, for being such a dominantly short bias trader, to then recognize that this kind of a stock has been a terrible, besides this day, besides me making money on it on the 6th and 7th, I mean, every other trade short-wise, besides here, every other short I've taken up here has been a loss. So it's become a quite difficult stock to trade from the short side. So I thought, okay, usually the most difficult shorts are some of the best longs. So I did take some long overnight. Ideally, we gap up and just keep this grind going. Now it is extended, so if we go red again, like I'll just sell. My risk is if it goes red, because again, I don't want to forget the fact that we are still up from $2. We are still extended. So this isn't like a long I'm trying to be aggressive on, but it is a long I want to take just to try to see if my flexibility of kind of flipping biases, because it's been such a difficult short, to see how well the long goes. So that's something I'm trying to, I wouldn't say testing out, but I definitely want to see how it plays out. So that's why I have a position overnight. If it does work, I think it could go to like $8. That'd be sweet to make maybe make like $1 a share, or more. I'm not gonna have such hard expectations, but so we'll just see how it goes. I have my risk, I have my profits, I have my profit target, I have my entry, and that's the best trade plan I can ask for, I can make. So the second trade I took today was on SGOC. If we go to the daily chart again, this is quite an extended runner. We went from this is even more extended than NLST, from 250 all the way up to 28, 20, almost 29, I think, at its highs, which is just insane. That's a huge runner. Didn't trade it really at all on the front side. I think I had one trade on it, which is very similar to the trade I took today. Let me just double check that it's the same ticker. Yeah, actually I did. So on this day, the 12th, this is a setup I like to call the parabolic short, and this is a pretty, I wouldn't say dangerous. It's a little more risky of a short, because if you don't know what you're doing, you can get pretty dangerous, especially if you don't know how to cut your losses. So it's definitely a more experienced, disciplined setup. But essentially what it is when a stock, if you've been trading for a decent amount of time, stocks don't go just up or down, right? They go sideways, they go up for a little bit, go down for a little bit. No stock just goes straight up, and no stock just goes straight down, especially on a 1 minute to like 15 minute basis kind of thing. So when we spiked super hard at the open, I mean, we literally went from 16 all the way up to 26 almost. So $10 a share in a matter of, it shows 3 minutes here on the chart. Let me make this a little bigger actually so you can see it. So it only has 3 candles, but that's because it was halting up. So when the stock halts up, it usually halts for 5 to 10 minutes, and then it reopens. So it spiked out the open, halted, spiked again, halted, and then tried spiking for a third time and halting up near 26. And this is what I mean when a stock can't just keep going up forever. At some point, it can't halt up anymore, right? There's only so many times in a row a stock can halt up. Now, yes, it could have halted up like 3 or 4 times in a row and not just 2 or 3, or even 5 or 6 times in a row. But at some point, the halts up stop. And so when they stop, it's usually going to lead to a halt down. And so that's exactly what happened. Once we failed to halt up is when I started getting short. It then halted down, and then I covered into this once it reopened for, I think I made like $4 a share. Like I took it from like 24 to 20, or 24 to like 19.50 or something like that. So that was a really sweet short. That's the only short I took on it in any of these days. Missed it this day, missed it yesterday, but then today, again, if we look at the daily chart, and if you know how the 7-step penny the penny stocking 7-cent framework works. If you don't, please ask. I'll go over it in more detail after this trade. But essentially, you have the huge run up, you have a pullback, and then you have kind of like a bounce. And that bounce usually fails and leads the stock to be fading back to where it came from. And so I wanted to short this kind of bounce on the daily chart to fade it back. Not back to where it came from, but at least back right on the day, which is what it ended up doing. So if we go to the intraday again, so I missed this day, and you can argue this was a bounce day to short, right? Once it panicked, once it spiked so much and then pulled back, shorting any of these pops here would have led to a nice, like, decent fade. And so after seeing that action, I not assumed, but I was prepared to short any action that looked like this day, right? I thought it might repeat itself, and that's kind of what happened. I didn't think it was going to spike as high as it did, because I did have a small starter on in pre-market. But the reason why I put a small starter on is more like a feeler. Like, it's so small for me that it would have to go above, like, it would have had to go break like above 17, 18, 19 to actually make it a decent little sizable loss. That's not how I like to trade, obviously. I don't want to risk like $6 a share. But when I want to just, not even a starter, when I want to just put a small feeler on, the stock, I could let the stock go against me for a long time because the position size is so small. And so thankfully I had that. Thankfully the position size wasn't that big for me to allow this to spike against me. And so similar thing, this started halting up around here. Once it started halting up, I knew at this point it was going to play out the same way it did over here, was that once it couldn't halt up again, it's going to pull back. It's going to pull back pretty hard. So that's what happened. It halted up, reopens, fails to halt up into the 16-17s, which is a nice resistance from this day. Right, there's all this resistance from this prior run up here now. And so once it couldn't halt up, that's when I took actual serious size. That's when I took actual size that then now I have to have a risk level, which was 20 or now 1650. I was going to risk the highs of this spike. We fail. We pulled back into the mid 14s. I covered most. I kept then about a third of my position. I then covered a third of my position, or the rest of my position, I should say, that last piece there into these mid 12s here. Unfortunately, I wasn't patient enough to catch any of this sell off here. I kind of thought that now that we were going sideways, I thought like the selling was kind of over. Unfortunately, I was wrong. That's okay. I left about $1 or $2 a share on the table. But then again, I made about $2 or $3 a share from the short up here, so not a big deal. I made like 4,500 or so. So between the NLST 5K loss and the SGOC 4,500 win, I'm down like maybe $300, $400, $500 on the day. Not terrible. It's a very small red day for me. And then again, like I mentioned, I have NLST long overnight, so we will see how that goes as well. Let me make sure you guys aren't asking too many questions here. Let's see. Let me reply real quick to someone's email. Doesn't seem easy. He hasn't got the link yet for some reason. Okay, let's go over some questions here. Old Ninja asks, is a strong upswing at the close a general sign of bullish continuation? I'm wondering how you can get a sense of when the bull run is going to turn when considering the daily chart. Or is it better to base it off the prior day high of the day, seeing it the next day breaks that consistently? So a general rule I like to use when logging overnight or trying to see if a stock can continue its run is how well it closes near its highs. So that's particularly why I like NLST overnight, because it literally closed. I think it closed at 7:30, and I think the high is 7:31. So I mean, it's a cent away from its highs. It did have a sell-off, but the fact that it sold off and then recovered makes it even more bullish for me. Like, it's actually a good sign to see something kind of pull back and show that there's still buyers to bring it right back to its highs. Stuff like that, and again, versus reason why I shorted overnight on this night is because it literally closed at its lows, right? And it's not a foolproof thing. There's plenty of times where a stock might close weak and actually go higher the next day. So vice versa, a stock might close really, really strong and actually gap down the next day. So it's not a foolproof thing. But as a general rule, a stock that closes near its highs generally is a sign of strength, where a stock that closes near its lows is generally a sign of weakness. I won't short every stock that closes. Sometimes if a stock closes too weak, I won't long overnight. Like if NLST, say it panicked all the way down to like 440 on this day, say it literally this panic went just straight down to the mid fours, I probably would have covered because it was too much too soon, right? And essentially that's really where it went the next day, kind of thing. So if it closes too weak, I won't want to short overnight. And same vice versa. If it closed too strong, I probably wouldn't want to long overnight either. So for instance, like NLST today, if I bought and it just went straight to like 758 in like a matter of 5 inches, this huge spike, I probably would sell into that. So it's really it's wanting to close near its highs, but having it close near its highs in a nice consolidated area, which is exactly what NLST did, right? Nice consolidation all day for the last few hours. Like I said, did dip, but actually came right back to its highs and closed right near its highs on not an overextended strength or a sign of strength. Like the last thing I would want to do would be to long SGOC after this big of a move. Like if you're longing up at near 15 or 16, right, it's the same thing as if this was going to happen at the close, right? If you're longing something that's just spiked over $3 or $4 a share in like 5-10 minutes into the close, ignore that this happened in the open. I'm saying in this scenario, if this happened into the close, I wouldn't feel safe at all as a long side trader, just because it's like I chased big time and I chased strength too much too soon, right? A move. It's kind of like I've heard a lot of traders make this analogy of sprinting versus like running a mile, right? If you sprint, if you want to sprint to the breakout level or you want to sprint to new highs, if you sprint for too much too soon, it's not going to have a good chance of holding. Whereas if you're much more slow, you're much more steady, you've kind of paced yourself in terms of like the stock has paced itself, then right, you have a great chance of it working, a better chance of it working, I should say. So hopefully that answers your question. Okay. Yes, could you go over the penny stocking framework? Yeah, totally. Let's do that. So let me go over a recent chart that is doing it currently and then one that is played out. Let's do LWLG to start. So the 7-step framework, it comes from Tim Sykes' DVD, The 7-Step Penny Stocking Framework. It is something pretty much almost all my setups that I trade are from this framework because it's not a framework. A lot of people think of it as a framework of how penny stocks move. I think it's a framework of how trader psychology just happens. It's not so much that it happens. It just so happens that it happens a lot in penny stocks. But the reality is it happens in many other areas. It happened in Tesla like a year or two back. It happened in Bitcoin. It's happened with like lumber. If you follow like commodities, lumber did it. So it's a very neat psychological framework of how stocks move. It just so happens to happen quite often and more often so in penny stocks, which is why we trade them frequently. So apparently, how the 7-step framework works is the 7 steps that a stock takes while going supernova. And so LWLG is in the midst of one right now, towards the end of one. So essentially the number 1 is like a kind of the pre-run-up. It's where it's kind of basing and you kind of start seeing perking. When a 1 happens, you really don't know it's going to be a supernova. It's too early to tell. But every supernova has to start at some point. So the step 1 is like the supernova starts, whether it's like a small breakout, a small perk. You see LWLG has some volume coming in. That's kind of the beginning of it. Then usually step 2 into 3. 2 is like a breakout. So yes, there was a small breakout over like 2, but really the breakout over 450 here was really what got it going and got it really getting extended. And so then the number 3 is kind of the overexertion, kind of like I talked about how, SGOC really exerted itself on a minute basis. The number 3 of the framework is the stock exerting itself on a daily basis, right? You clearly see here that, LWG goes from about 2 to 8, which is quite a big extension, but it does it over maybe this is like 10 to 15 days or so. And then all of a sudden it goes from 8 to 18 in like half the time, right? So it took 2 to 8, $6 a share in about 10 or so days. And then it went from 8 to 10 or 8 to 18, $10 more a share in like 5 days. So that acceleration, that extension very quickly in a much shorter period of time is like the number 3. that's usually when you want to be selling. That's when you want to, you know, just kind of, that's when you want to get out, right? That's the exhaustion. That's the sprinting that a stock is doing that I'm talking about. And so if you're long, you want to be selling. Then the number 4 of the framework is the backside. Number 4 is usually referred to as the first red day. This is when the euphoria, the sprinting ends, like the party is over. And that's when you see it here. You see it here how it tops out at 18 and then closes red. And then the very next day after that, I mean, it just gets crushed from like 14 all the way down to 10. So, this kind of move, even the next day, 3 days in a row now, it went from then 10 to I believe as low as like 7, like low 7s. So you could kind of say these 3 days is like the number 4, where it's kind of like the backside is here, it's ended. Then there's the number 5. The number 5 is like once enough selling is over, once the number 4 has ended, enough buyers start buying, enough shorts start covering, and then a number 5 happens. Number 5 is referred to as kind of like a daily bounce or a first green day. That's why you see this first green day happen. There's then 2 small green days after that. After that bounce is over, the number 5, then the number 6 comes. The number 6 is referred to as the bounce short. The bounce short is where, longs are buying during the number 5 thinking, oh, wait, the run's going to start again. We're going to go back to new highs. We're going to start it. Like the people who missed this run up are now probably buying this small run up thinking they can kind of catch us. Like they feel like they missed it. They're kind of in it now, like they're going to get a second chance. So that's why it ends up being a good short, because once they realize that it's not going to happen, once they realize that it's just a weaker bounce and they can't get over this prior resistance from the previous highs, then it starts to fail. And so that's when it's called a number 6 short. You short the daily bounce. Usually, again, results in another green or another red day or two. This time, same thing. It resulted in about 3 to 4 red days. And then usually what happens is that the number 7, which is the last step, it just fades off back into oblivion, right? Over the next 3 or 4 months, you just see it fade off. Now, granted, you can have multiple, once the backside happens, you can kind of have multiple 5s and 6s play out. So as you can see here, like we had a 6, it pulled back, and now we're kind of having another 5. There's almost like another first green day after so many red days, because again, sellers are exhausted, buyers want to step back in, and we have a green day. So this might happen 4 or 5 times, so where we have like another number 6 sells off, green day, number 5, 6, and that kind of creates the number 7, where it'll fade back down. And I'm not going to make too many like harsh or hard predictions, but like LWLG, after the number 7 is completely over, after the supernova is completely over, I wouldn't be surprised to see the stock back down to like $4 or $6. Right, that just slowly fades over months back to where it came from. Maybe even like 6 months from now, it's back down to like $2. Just totally fades away. The reason why I say that is because that's how usually they play out. And if you actually go back, I think 4 or 5 years ago, the same thing happened here. So like this, right? Like kind of a mini supernova here, right? We had like a number 3 and then a number 4, then another number 3, another number 4, kind of a much bigger bounce over a few months, then like a number 6 and then a number 7. And then from there, it kind of just starts chopping around and just fades, right? And so that's what SGOC is in right now. SGOC, like I mentioned earlier, right? We have kind of almost the 1 and 2 happened in the same day, right? It's not exact science in a way. Like it was such a hot runner that just happens right away. Boom, it just explodes, right? We go from pretty much from a 1, 2, then to a 3, then this 4 on the first big huge red day, quickly then a number 5 on this green day, and then like I mentioned today, my short on it was a number 6. And now likely we'll just start fading off more and more and more to a number 7, and it will fade back down to $5, $4, $3 a share. What's another one? I mean, AMC was a really good one. It's a different one, but I mean, if you've been following AMC with like the AMC apes and Wall Street bets, even now, even in something like this is still following a framework in some manner. Same thing. Like there's number 1, a couple perks to make it interesting. Number 2, the key breakout over 20. Then a 3 speed up all the way up to 72, which was incredible. If you were watching it that day. Number 4, first red day, a small bounce here. We kind of bounced from like the mid to low 40s all the way up back to 60s, low 60s. Then the short bounce. We have 3 red days. It almost kind of looks like LWLG, where we have 3 nice red days in a row. Again, then another number 5, which this one's actually surprised me. I thought this was going to go much lower sooner. But I think the resilience from like the AMC apes and Wall Street bets kept us alive much longer, where we actually bounced longer. Like this was almost like a multi-week bounce, kind of, and it kind of curls out, and then now this is kind of like another number 6, kind of into a number 7, where it just started fading, and now we had another big green day today, but we are still below like the key 40 support level, 39 support level. However, we are going over that in after hours here, so that's interesting to see. But yeah, again with AMC, no harsh feelings to the apes, but it's just a general psychology thing that I have a feeling, in another 4, 5, 6 months, AMC will be back down to 25, 26, maybe even 16, back down in like this kind of a range. So we'll see, but that's generally how the framework works. If that was good enough for you. Let me check my emails again. Emails are good. Let's check the chat. What's your thoughts on EVGO if you haven't reviewed it yet? I have not. Let's check it out. EVGO. Okay, 1 second here. Let me get some water. So it looks like there was news, just based on how it moves. So like the news here, named by GM as the preferred provider for EV fleets. Oh, that's cool. So we add electric vehicle news. We go to the daily chart. Oh, it's a recent IPO. As I think it is, right? Yeah. So that's cool. I mean, it's not something my particular strategy would trade. Because again, and I will admit, like everyone has, I think the mistake a lot of traders make is that they want to be good at everything, right? You want to naturally be a long and short trader. You want to trade longs, or trade listeds, you want to trade OTCs. And yeah, I agree with that. You should probably learn how to long and short at some degree and trade listed and OTCs at some degree. But nobody's perfect, right? Everyone's a human being here. Hopefully everyone's a human being here. There may be some algos out there, but my biggest weakness is longing NASDAQs, like by far. I mean, I think I'm profitable with them only because of a couple good trades that I've made. But ever since the beginning of my trading career, listed longs have been probably one of the worst setups for me personally, which is why I'm way more better at short selling for listed and OTCs. So looking at this, my first instinct is like, yeah, it's good news. On the intraday, it's a recent IPO, so there's not much resistance. It held somewhat decently, but for me to tell you, I think I'm convicted it's going up or I'm convicted it's going down. I just don't know. Again, the good news is good, so that's definitely has something going for it. But unfortunately, I have no idea. I don't know if it goes up, it goes down. I don't have any conviction or like stats behind it, and I think that's why I trade the framework so well and why I stick to the framework, because it happens so reliably and consistently, if that makes sense. But yeah, I know a lot of traders who are news-based traders who like to trade off news. Again, that's another weakness of mine. Even though I hear news, for me to judge how good it is somewhat difficult. There's a very few news scenarios that I can really tell how good they are. So if you're early, like you gotta there's news like services out there that can help you like get news alerts right when the PRs gets released. And so if you have one of those, like if you could buy anywhere in the 11s, I mean, you could have immediately flipped in 13s for a great profit. That's just never been my style or something I've never gravitated towards, but I know plenty of traders who do it. So that's something you could do as well, or that you might find attractive in terms of the strategy. Kevin asks, what's your normal day like? Walk me through your steps of preparation and when they happen, prep time, when exactly you build your watches, when are you watching the markets, when you're not. That's a great question. So I particularly like to make my watch list the night before. So after this webinar, I will probably put my watches together. Now it is summer trading, so that my watches isn't going to be very big, but it usually takes me anywhere from 30 minutes to an hour in the afternoon to make it. I usually won't make it right after the market close. I'll usually go run errands, kind of take a break from the markets, from the trading day, really let my mind reset itself, and then I'll come back maybe right before dinner, right after dinner, and for 30 minutes to an hour, I'll bang out my watch list, figure out what I'm watching the next day, and usually 99% of the trades I take are from my watch list the night before. I'm rarely the kind of trader that will find a stock that the morning of and trade that stock. I know a lot of people do that, and if you're a long trader, that's generally what a lot of longs do, because they're finding the newest, hottest runner of the day, which is usually a good time to long if you want to be early. Me as a short seller, I usually have the luxury of being able to wait. Like I want to wait and find out what's actually getting overextended, so I can wait a day or two or 3 days. I can like wait to see what is finally running, and by that time, at night when I'm making launches, I can see now. Okay, this many stocks are up too much. This stock hasn't run enough yet. I make my watches that way, so pretty much anything on my watch list will be what I'm usually trading the next day. I'm rarely scanning the morning of because I'm just not a big long trader in that sense of in that sense of strategy, as you could say. So make my watch list night before. I live on the West Coast, so the market opens at 6:30 a.m. So I wake up at 5:30 a.m., about an hour before. Once I wake up, I review my watch list, make sure my thinking on what I wrote down for those particular stocks is still the same. I then will look at those stocks. Are the stocks gapping up? Are they gapping down? Are they doing what I thought they would be doing in pre-market based on what I thought last night? As a short seller, I'll start to pre-borrow stocks that do look good. For example, SGOC, when I was, the night before last night, I was writing to myself, I want to look for a short to bounce or a bounce to short. And that's kind of somewhat what happened. I had to adjust. Like I went over the trade plan. Because I missed this bounce short the day before, I made a watch list saying like any spike or bounce, or even if it fades below this like 12 area, I want to get short for it to fade back down to where it came from, like 9, 8, maybe even $7 for really sold off. And so that's why I took a small feeler here. But again, such a small feeler that I was able to let it squeeze against me because again, with a feeler short, it was such small size. I mean, I could let it go to 19 and it would have been not even a couple grand loss, which is a totally fine loss for me. Now, when I added up here, when it halted up and then failed to halt up at 16, that's when I added serious size, and that's when I said, okay, I have to cut it if it gets over 1650 here. Then it faded, covered most in the 14s, then covered the last piece here in the 12s, like I mentioned, and that's kind of like the thesis, right? So the thesis I had in my watches from the night before did end up playing out. And so pre-market is when I would in pre-market is when I would like pre-borrow shorts. If you have like Cobra or Centerpoint or like Trade Zero, you probably, if you're like me, you will pre-borrow shares of short in pre-market. So I had pre-borrowed shares in the morning of SGOC when it was gapping down. But again, I only took a feeler. I wanted to wait for the market open. And then once the market open started squeezing, I actually then borrowed more because I realized it was going to give me a better opportunity of an entry than if it had never spiked and it kind of stayed red the entire day. So, like I said, watching stuff pre-market, pre-borrowing stocks that I love looking to short. If I'm long overnight, like NLST, I'm long overnight, I will be looking to make sure it gaps up. Once the market opens, I'll be watching any positions I particularly have. Right. Any positions I have overnight are always going to take priority because it's like that's where my money's on the line. I'm not going to be too eager to taking new positions. Shouldn't say not eager to take new positions, but I won't take new positions unless I know I have my current positions under control or they're working the way I want them to. So NLST tomorrow morning, I'll be making sure this is either gapping up, and if it's not gapping up and it's gapping down, I'll be looking to sell first thing out the open before I do anything else, make sure that's safe, make sure my losses are cut. And from there, I will then kind of, again, make other trade plans, look or follow up with other stocks that I've made trade plans for the night before. And usually that will go on, I'll be watching stocks, making sure. And again, if the stock isn't, following the trade plan I made the night before, if it isn't doing what I think it should be doing, then I might just not trade it, right? I literally could there's plenty of stocks I put on my watch list that I just don't trade solely for the reason that they're not playing out the way I think they should, or they're not playing out they're not meeting the criteria of a setup that I usually would trade on it. And so sometimes I just won't take a trade. Sometimes I'll just watch the market. I'll watch the stocks that are on my watch list, but it doesn't necessarily mean I'm taking a trade on them. I'll answer people's questions, like right here's the breakouts and breakdowns chat with me, Jack, and Mariana. Like I'll answer people's questions in here. stuff like that. And then after about the first hour or two, we enter midday. Again, being on the West Coast, I'm not a morning person, so midday is when I'll actually start to like I'll either run an errand or I'll take like an hour or two nap. Um, when I first started trading, I never took naps only because I felt like I was so overwhelmed with how much material I had to study being in the Tim Challenge that I definitely watched video lessons or watched DVDs midday. But now being over 5 years in now, um, I will take an hour nap or so. Like I said, run errands. Sometimes I'll go to the gym. Then I'll come back for that last 2 hours or so, from like 2 p.m. to 4 p.m. Eastern. I will then. That's when I'll actually start scanning for stocks that are up on the day, stocks that I would potentially want to long overnight, which are 99% of the time OTCs. That's what got my attention on LST. After I covered for a loss in the morning, I then came back late day and saw that it was holding near its highs really well. Saw that it's been such a pain in the ass from the short side the last few days, and that even though it's extended, it could easily have another run up where it broke out over the $6 range and we nearly went to 7. I have a feeling it's going to break over this low sevens range and head to 8. So that was the thesis I played out late day, and I realized, okay, I think it's worth a long. So then I longed into the close. Once we close, like I said, then it repeats. Like I go do other errands, I go take a break, I go reset, I go hang out with friends, come back dinner time or so, make my watch list, and then I just repeat it. That's typically how I do it. And then in terms of reviewing trades, I'll review my trades very briefly throughout the week, but usually on Saturday mornings is when I really dive deep and will then like really review them. And that's also when I post them on Profitly. So that's more of the in-depth review of my trades for the whole week on Saturdays. All right. Holden asks, what makes you look for a morning spike to get short versus shorting a stock right out the open? So the only times I like to short a stock into a morning spike is when either A, the spike is extremely overdone, like SGOC was, right? Having a spike. It's almost like if it goes parabolic. The same way, SGOC did it this morning, and it did it 3 or 4 mornings ago here, right? Going from 17 all the way up to 26 very quickly, like I mentioned at the very beginning of the webinar. It just too much too soon, right? The stock is sprinting too hard, too fast. That is sometimes when I'll short. Or that, and that's a rare occasion because most stocks don't really spike that hard that fast. It's kind of a, I would say 1 in 10 kind of stocks do that. Usually low floats do that, and low floats are pretty dangerous. I try to avoid low floats, so it's not a very common thing for me to do. The other scenario that is more likely for me to short a morning spike is also why I shorted SGOC today, whereas if there is a ton of resistance from the prior days. So that's why I was so convicted on SGOC, was because not only was it sprinting and getting overdone too quickly, but it also had tons of resistance from the day prior and from, every single day. Every single day, the last 3 or 4 days has now a lot of sellers, a lot of resistance in the 16, 17, 18 range. So the fact that we were going into that 16 area here made me feel very convicted that it was going to pull back. Now, granted, you still have a risk. Like I said, if it was going to break 1650 here after it had like this first red candle, now that like it somewhat was confirmed, if we kind of held up and started breaking out over 1650, like I was going to cut it. Because those are the two scenarios, one more favorable than the other, of when I will consider shorting a morning spike. So, Kevin asks, how many total hours a day would you say you spent working more than actual trading, but moreover working, such as watches, building, research, etc.? When are you done or breaking? So in the beginning, it gradually increased. So when I first started the challenge, I was super lazy, like really, embarrassingly lazy. I remember watching like 1 hour of like penny stocking 101 or penny stocking part 1, like an hour of it, and just like, okay, let's start trading. And I literally just started trading. I just opened a trading account and started losing money right away. So that was super, like, don't do that, guys. That's really, really bad. That's probably the biggest regret I have about when I started, was being that lazy. And that went on for about 2 weeks to a month before I really realized, like, okay, let's actually watch the material. So, and again, like I said, it gradually started. So it went from like watching an hour a day, 2 hours a day, because as I watched more, my obsession with enjoying the game of trading itself increased. Right. Started with 4, then I went to 6, then I went to 8, and I think at my peak was when I entered summer vacation from college. Like I had not graduated, but my semester was over and summer was starting around May time. And I think that May of 2017 is when I put in like almost 10 to 12 hours a day for the entire month. And that was my peak. After that, I went back down to like 8 or 6 a day. And so in terms of like work, yes, I'd watch the market for the first 2 hours, like I mentioned. But in terms of work, like you said, outside the market hour or outside of just watching trading happen, like actual work and research and watching building, I mean, again, about an hour or so, watch this building. I watched about 2 to 3 hours of video lessons a day. I watched about a webinar a day, which is webinars usually around 1 to 2 hours. I usually would read some form of a trading book for about an hour a day. So you can kind of add up the math there. I mean, it adds up to about 5, 6, maybe 7, 8 hours on long days sometimes if I want to put extra work in. And so, yeah, I pretty much tried to do that as much as I could. Again, life happens in the way. Like there are some days where I only got 1 hour in. There are some days I got 8 hours in, right? But on average, I would say over the first year or so, if you want to include days I didn't study at all or 1 hour, and then the month I had like 12-hour days, I would say it averaged out to like 6 to 8 hours a day, maybe like 5 to 6 at the more accurate number. I'm 5 weeks in the training challenge, and the biggest struggle is that I'm having to grasping an understanding of how to consume the content. There's a massive content volume coming from all directions. Feels like a lot of whack-a-mole. yeah. No, don't worry. I think everyone's been there. Where did you start studying in the beginning, and how do you organize your approach to the content? What did you focus on? Yeah, totally. Like if you feel overwhelmed, don't feel like you're the only one. Because, I mean, I started the challenge 5 years ago, and I was overwhelmed then. And I know Tim is a maniac. Tim has constant more and more information, more and more stuff coming out all the time. So even now, he's got to have way more information in the challenge than when I started. So if you're overwhelmed, that's natural. The way I started was I watched all the DVDs first. The DVDs, I would say, were a really good foundation building because they're kind of a DVD for every single topic and subject. So I didn't even start watching. I shouldn't say that. I watched the video lessons Tim releases every couple days or weeks. I watched those when they first came out. But in terms of going back to the very first video lesson and grinding through all the video lessons from video lesson number 1, I didn't start doing that until I finished all the DVDs. So whatever, there's like 8, 10, maybe 12 DVDs that come with the challenge now. I had finished all those DVDs in the beginning, which took me about maybe 4 to 6 months. So I watched 3, 4, 5 hours of DVDs a day. Once I finished that, I then went to the hybrid combo of what I mentioned earlier, which was video lessons and webinars. So I'd watch 2 to 3 hours of video lessons a day, and each video lesson is like 5 minutes. So I could bang out like 20 to 30 video lessons, get those few couple hours in. Then after that, would watch a webinar. Again, webinar takes an hour or two. I'd usually watch one. I'd watch an archive webinar. So whether it be one of Tim Grattani's archive webinars, I have 3 or 4 archive webinars from the challenge. Archive webinars from like Michael Good or Mark Crook, stuff like that. So that was kind of the cycle I took in terms of studying all the material. In terms of my own personal, like outside of the challenge, like I said, reading books or like working on my trading spreadsheet. My trading spreadsheet I always worked on because every time I took a trade, I logged it. Every time I wanted to review my trades in depth, I generally slowly over months and months added more particular parts to it. So that was kind of a gradual thing. I didn't really it wasn't like I just started making a spreadsheet like 6 months in. I pretty much started from the beginning, and then slowly as I learned more and more about how I want to track my trades, that improved over time. Same thing with like was one other thing. Like reading books. I think the fastest I got to reading books was about 1 a week, which was extreme. I only did that for a couple weeks because I'm not that fast of a reader. I really consumed a lot of time reading when I did that. But I think once I got very serious about reading trading books, which was probably around the time I was close to finishing all the DVDs, because one of the DVDs, Tim gives you a list of like 50 books, and there's a lot of good books in that list. So I think once I got to that DVD, I started taking reading seriously. And I think my average, I was probably reading a book every 2 weeks, or two books a month, was probably my average. Now I will admit I'm pretty lazy now. Now I probably am lucky to even finish one book a month. Um, but that's just because I've read all the really good trading books that caught my interest. Most books now that I'm reading are more not as grasping in terms of my focus. So it takes me a little longer to find time to read them. Or to make time to read them, I should say. Is there a certain scan you use for overnight longs? Yeah, so I scan. So I have this thing called OTC scan. The people in the breakouts and breakdowns chat room actually get this scan when they join. But essentially, it's all my scans are revolved around big percent gainers. But for my OTC scan, I will solely scan for OTCs. So with stocks to trade, you can solely pick scanning for OTCs. And so some of my criteria is like, instead of being 10% or up, I look for 7% or up. I want over 1 cent because I don't really like dealing with sub pennies. I would like to see something maybe less than $20. I really don't like trade something over $20 unless I absolutely have to. Over $100,000 or 100,000 shares in volume, which is pretty low. It's a pretty low requirement. Generally, I'd want it much, much higher. And over 300 trades. Again, 300 trades is pretty low. But again, I'd rather scan and get a large pool of stocks, and then from there break it down to what I want. So the OTC scan is what I would typically look when I want to look for overnight longs, because that's when I'll start looking for stocks that have spiked in the morning and then have held near their highs by the end of the day, like NLST. I think NLST is actually on my scan right here. Yeah, NLST is the first one that popped up. So even if I wasn't watching NLST in the morning, had I scanned for it and then saw it and then it popped it up on my screen and then saw that it was holding near its highs, right? That's how I would have found it, and that's how I would have started longing it into the close. Linda says, Kevin, I find it helps to pick one or two patterns and work on those, consistently trading them. That will help information overload. Yeah, totally. That's a great point. In terms of, right, not just studying the material, but then applying that material into my trading. Right, the best thing you could do is, right, find one or two setups. Don't feel like you need to learn all 7-8 setups that are out there that exist. I mean, there's probably like 10 or 20 setups that exist that you could trade in the small cap world. But like, don't feel overwhelmed. Don't make yourself even more overwhelmed by trying to think you have to learn all those at the same time. Pick like one or two. I picked one when I first started. I will admit I had a few months of experimenting. I had a few months of trying different setups, different things like breakouts, morning spikers, this and that. But then once I found panic dip buying, that really grabbed my attention. And probably for the next 3 to 4 months, I was solely focused on that. And that really narrowed it down for me to, like, of course, I was studying all the material that maybe didn't have to do with panic dip buying. But then when it came to applying certain principles to my trading, panic dip buying, was the move, was what I wanted to do and use. So, I feel right now the chat room is just noise to me because it's not able to identify what is ideal setup for different chat folks throwing out tickers, random discussion. Thoughts on that? Yeah, don't. I mean, I know a lot of people have this problem. I personally never did, only because I just didn't read other people's comments. Like in the chat room, if a guru wasn't mentioning it, or a moderator, or maybe there wasn't a moderator, but maybe it was a trader that's like up over 6 figures in profits, like verified profits on his trades. If you weren't somebody that I at least knew of that was the profitable trader, or you weren't a moderator or a guru in the chat, I likely didn't read your comment for that reason of, like, there's just some people who just don't know what they're talking about. Or are just too new to really know what they're even saying. So I would cut out like 90% of those people. Find the few people that are good traders, whether that be, like I said, the moderators or someone who is up over, I would say 6 figures is a good number to start trusting or start seeing if they're reliable. And following what they're saying, because they're the profitable traders. They're the traders you want to be like. That doesn't mean follow everything they say. At the end of the day, you want to try to formulate your own theses and your own trade plans. But it doesn't hurt to try to learn from them and the comments they make about the stocks they're watching. And generally, if it's a stock they're watching, it's generally a stock that is everybody's watching. Right? It's the stocks that some random guy mentions that like no one's watching is the stocks you want to avoid. And that's the noise you're probably referring to. So that's how I did it. I just ignored most people. I'm strongly leaning towards signing up for the breakouts and breakdowns, and I'm curious what it's structured like. How many webinars per week, discussion chat room before or during a trade? Yeah, totally. So I can go over that. So the breakdowns and breakdowns chat room is through Stocks to Trade. I know a lot of people would like to join if it wasn't, but unfortunately, me and myself, Jack and Mari don't have control over that. It's kind of integrated into Stocks to Trade. So if you have Stocks to Trade, you can add it as an add-on. So every day, Jack has been taking a few weeks off. He's been pretty exhausted from how hard he pushed it in the spring and the winter. So he's taking a few weeks off, but he'll be back. He might even pop in from time to time. But for right now, me, Mari, we're in the room every day answering people's questions. We're alerting our, not I would say alerting, but we are mentioning our trade plans. It's not like an alert where if you're like in the Sykes room where you're going to get a stricter alert that he's buying or selling something. Here, it's like I'm going to comment. I'm longing X, Y, Z. This many shares. This is my risk. Which is it's like a comment. There's no strictly alerts. But I am mentioning my trades. I am talking about trade plans. You can ask me about your trade plans or your trades. Same thing with Mari. Same thing with Jack when he's in the room. There's 2 webinars a month, so every 2 weeks we do give a webinar. All those are archived, and I think we've done probably 8 or 10 now, because the chat has been live for about 4 to 5 months. So you can go back and watch all those archived webinars. When you sign up through the chat room, you get access to Stocks Trade University, which is kind of like Stocks Trade's Profitly in a way, not in terms of uploading trades, but where they store the archive webinars, where they store our watch lists, where you can download my scans. You'll get 3 of my scans that I go over. I kind of have a video going over how I use them. Again, my watch list is up there daily. Mari's watch list is up there daily. Jack sends out a weekly watch list there, which is kind of how he's seeing the market play out for the week. So that kind of stuff. And again, we're in the chat room. You can ask us questions, stuff like that, not only in the chat room, but entering webinars. So yeah, that's pretty much it. I think we have more things rolling out depending on what Stocks Trade wants to do with the room in the future. But for right now, right, 2 webinars one webinar every 2 weeks. Me, Jack, Mari answering your questions, talking about trade plans, our daily watch list, Jack's weekly watch list, stuff like that. So let's see. You touched on this a bit specifically with studying in the challenge. What did you do that you liked that would repeat if you were at the beginning? What would you do differently than you did? So differently would be I would have started studying right away. I was very, very lazy, like I mentioned. I mean, for the first 2 weeks to a month, didn't even study at all. That was a mistake. Would it have saved me a ton of money? Not necessarily. I generally think my learning curve was still efficient in a way that I lost a good amount, not too much, but I did a good job of keeping my losses relatively small to where I didn't emotionally scar myself. And the losses I took was what I needed to learn. Right? I feel I get very scared when traders are making money right away, because although that's great, but the reality is everyone who wants to stay in this game long enough will reach a point where they have to face a learning curve. And when you face that learning curve, there's losses involved. There's going to be losses involved. So I'm very happy that even though I wasn't maybe studying as much as I should have in the first month or two, first few weeks, I should say, but I am glad that I lost small amounts of money, because that's what really got me to study. That's what made me realize, if I don't start studying, I'm going to lose all my money, right? It was kind of a wake-up call. I wouldn't have had that wake-up call if I was making money. So that part I'm very happy about my start of the journey. Something I really happy I did, and most people don't do this, is going back to video lesson 1 and literally starting from 1-1. Go to number 1, 2, 10, 20, just literally video lesson by video lesson, all the way up to, I think at the time Tim had 4,000 or 5,000 in the challenge. I mean, I watched all of them. Like I said, I watched 20 to 30 a day. Did that for 5 to 6 months. I don't know the math on that, but I mean, if I did 30 a day, 30 video lessons a day for 6 months, which is 180 days. Yeah, that's 5,000 video lessons. So that's how I got through it all. And the reason why I say I'm really glad I did that was because Tim is still the same trader. I would say that he's a different trader, but he still follows the same principles. So you're not gonna I guess another way to word it. He used to short sell, right? Tim used to be a big short seller, and maybe that's why I primarily learned how to short sell, because some of his oldest video lessons were him short selling, solely short selling, and solely trading a lot of OTCs, which is why I love and kind of pretty much learned trading OTCs before I learned how to trade Nasdaqs. A lot of profitable traders I know learned on OTCs before they graduated Nasdaqs. Jack Kellogg did that. Tim Grittani did that. I'm pretty sure Matt Monaco did that. Like a lot of traders did that. And I don't think it's a coincidence that like some of Tim's oldest video lessons are him short selling OTCs, or him talking about some of the old pumping up promotions that he used to short and trade. So some of like the first like 1,000 video lessons, 1 through 1,000, have such valuable information. I mean, he did some live trades video lessons. Like, when does he ever do a live trade video lesson anymore? Right? Because back then he wasn't as big of a as he is now. Like, he was just starting his business as a teacher, just starting him as trying to make people like this is before he had a millionaire student. Like, this was before Tim Grittani became a millionaire. This is before Michael Good became a millionaire. So he was a very different person back then. And I'm not saying it's bad or good. Like, he still has bunch of valuable lessons to give as a trader now. But he's just a different type of trader now. So back then, so you can learn from both ways, and which is why I say watch all the video lessons, because you can not only see how the markets have changed, but how he has adapted, how he has changed as a trader. And so the first 1,000 video lessons I thought were like the best thing I could have ever watched, because it really, really broke down like how you manage trades, like how he traded, how he short sold, specifically OTCs, which again, till this day is still my most profitable and favorite setup. So that was a huge thing that I was happy about. And it's funny because you notice you can see, but from watching the video lessons, you can see who studies and who doesn't. Because video lesson 1, you can see how many views are in all the video lessons. Video lesson 1 has like 30,000 views, like the most views any video lesson Tim has ever had. Then you get to video lesson like 100, there's like 5,000 views. Then you get to video lesson 200, there's like 2,000 views. Then you get to video lesson like 1,000, there's like 100 views, right? Or 1,000 views at most. You can clearly tell there's a huge taper off of students who stick with it and students who don't, right? And it's the students who can really absorb and watch every single video lesson like that and stick with it and be committed and stay consistent, get the most value, right? And get the most information. And I'm someone who did that, and I don't think it's a coincidence that all that knowledge at some level, whether it's subconscious or conscious, is in my brain, and I'm using that knowledge to this day. So what trading software do you favor most? I saw Dan Harris uses both Dash Trader and StockTrade, but he actually uses E-Trade. Are your preferences similar? Yeah, so it just depends on either A, what broker I'm able to enter my orders through, or B, like what I like the most. So I use StockTrade in the sense that I love their scanner. I've used their scanner from the beginning. Like when I first started trading, I got a StockTrade account, started scanning with them. I like their charting in terms of making a watch list because I like how big I can make the charts. I like how I can zoom out. I like the multi-day time frames. So that's what I'll use StockTrade mainly for. And obviously now run the chat room. But I do like, once I got a Cobra account, I do love Dash trading, which is the charting of Dash right here. You can see my little green arrows is where I covered here for a loss in the morning. But I love these charts for entering orders through my Cobra account. I also have a speed trader account that has DAS software linked up, so that's how I'll use DAS for them. I do have E-Trade Pro, but I don't use E-Trade Pro for charting. I just use E-Trade Pro for any entries or exits for my longs, because all my longs are taken at E-Trade. So I will have E-Trade Pro open to place my long trades there. Besides that, I do have an IB account that I use Trader Workstation, which is IB's software. But again, that is solely just to enter any orders I take in IB, which is pretty rare. IB is like my least used broker now. But yeah, it's really just what I use each particular trade, or each particular, whether I'm longing, whether I'm shorting, whether I have to short at this broker, whether I have to short at that broker, whether I'm scanning, whether I'm looking at this chart, that chart. That's how I'll pick what software I'm using on any particular. But also, again, I have this laptop that you're looking at right now, but then I have two huge 32-inch monitors right above this screen. So I have everything all the softwares are laid out where I need them to be, so I can quickly reach them when I need to. I've watched most of the DVDs. I totally get the main mindset Tim is trying to teach, but when I go specifically place to trade, I feel I don't have enough info to make a good analysis. That's fair. Yeah. No, I mean, I think that this is the tough part that weeds out a lot of people who don't stick with trading, is that there's a saying, I forget what the saying is. It's like, no matter how much someone teaches you trading, only you can learn it yourself. So yes, having a mentor, having a teacher definitely shortens your learning curve. There's no doubt about that, because they can really give you a funnel. They can give you kind of a channel to work within, but then within that channel, you still have to make it to the end, right? Like say there's like a mile long like channel, and if you did it on your own, it's like say there's no channel at all. If you did it on your own, there's no guidance, there's no channel. You could just walk in any direction you want. With a mentor or someone who's done it before, you're at least now channeled to like maybe a 20-foot long channel or a 20-foot wide channel. Like say it's a mile long and it's 20 feet wide. So instead of being like all over the world, instead of being able to run or try any different direction you want to go, north, south, east, west, a mentor is going to be like, no, walk this direction for this length of time, right? They'll really shorten it to narrow it down so you know which they're going in the right direction. However, that doesn't mean you're going to walk straight, right? You're going to hit the walls. You're gonna make a few U-turns, right? They're going to put you in the right direction, but it's still up to you at the end of the day to kind of go through that learning curve, get that experience, take trade plans that you don't know how are going to work out, learn from those trades that you took to really finally realize, okay, I'm going to walk in this direction. I may be hitting the walls. I may be, it's better than just going like south when you need to go north, right? So at least having a mentor, you're headed in the direction north, but you might go diagonal for a little bit. You might go sideways for a little bit. There's no matter how many lessons I learned from, whether it would be Tim Sykes, Tim Bertani, any of the mentors when I was learning from them, I may have learned a lesson from them, but the lesson didn't get truly instilled until I learned it myself in a trade. Like I made it, like say Tim Bertani made a mistake in his Trading Tickers DVD, and I'm like, okay, that's a mistake he made. I'll try not to do that. Until I actually made that mistake in a trade myself, then it clicked. It was like, oh, this is what it feels like to make that mistake that Tim did, right? So I totally understand how you feel. And I think a part of that, right, it's just experience. It's going through those trials and tribulations, going through that learning curve. Because even though, yes, you like you said, you get the mindset he's trying to teach, until you experience it yourself with your own hands-on kind of actions, taking a trade plan, making a trade plan, making a watch list, taking a loss, taking a win, that kind of stuff, that's really going to start molding you into seeing things play out. And then it's a constant cycle, right? You learn something from Tim, you learn it yourself trading, you learn a new thing from somebody else, you learn it from trading. So it's this constantly, refresh and refine process that gets you better and better over time. In your review, are there any advantages of Dash Trader? You use it mostly for charting. I'm assuming you don't place trades through DAS. No. I don't place any trades through Stocks to Trade, because even though Stocks Trade you can link some of your brokers now to Stocks Trade. I personally don't use it just because I never have. Like I'm kind of a creature of habit, so I haven't really tried that new. No, DAS is probably my favorite to enter trades on for the reason that it is so simplistic. Let me delete my account number so you guys can't see it here. But this is like a level 2 box for NLST, but I absolutely love it because it's so efficient, right? It tells me its last price, tells me how much is up on the day, tells me the volume, tells me its range, its high and low of the day, tells me how many shares I can have. I can have this many shares. I can press the P button, which immediately tells me my position, which is 0, which is why it goes to 0, no shares. But if I had like 2,000 short, I would press this P button and it would immediately give me my full position. I can click all these different routes to pick from how I want to enter my order. I can hide my size if I want to only say I want to buy 10,000 shares, but I only want to show 1,000. I can do that like this. I then pick the price, short, cancel my orders, buy, pick my account. I can have more than one account in certain DASs, stuff like that. So it makes it super. I can click certain prices. Like if I want to buy at 748, click it there, immediately it fills the price, that price that I want. If I want to sell it like 710, it immediately fills it there because I click 710. So the usability of DAS, level 2 in order entry is like the best I've ever seen. Haven't found anyone even close to how well they do it. So again, when I'm entering orders through DAS or Cobra or Speed Trader, it's all on this DAS, and I love it. I love how it's set up. Continued, not enough specific info to analyze setups. No, you're good at trade. Oh, okay. So that too. And so not only in the terms of like what I mentioned of refining your process, learning lessons, but a huge thing for me was tracking my trades. Right? Was having rules in my trading spreadsheet. Like, if you go to my YouTube channel, let me put my YouTube channel here. Actually, I have I'll just actually link the video of me going over my setups and trade, or not setups, my my trading rules. So once you like formulate trading rules that you want to follow, and again, you can add that, you can make more rules as you move along and go along in your trading. But like tracking your trades, finding out if you broke a rule, did you follow your trade plan? Were you trading your P&L? Were you trading the stock? Stuff like that. I'm gonna put in the chat here. Really studying and tracking your trades to find out where were your biggest winners, where were your biggest losers. Because if I take, like, say I take 50 trades over like 3 or 4 months, I then end up looking at all those trades and I find out that all my biggest winners are breakouts and all my biggest losers are dip buys. Then right there, boom, that should clearly give you more direction in the fact that you need to be focusing on breakouts and not paying dip buys. And that's what happened to me. I can trade breakouts now, but when I first started, I was terrible at trading breakouts. And I realized that from tracking my trades. I looked at all my trades for the past few months. I realized all my biggest losers were breakouts, and I realized all my best winners, or at least somewhat decently good trades, were dip buys. And from there, that like really got the ball rolling. So stuff like that. If you're not tracking your trades, or at least uploading them properly to see kind of where your biggest winners and losers are, I think that's a big mistake. I definitely think you should be doing some form of tracking. So thanks so much for information. I really like how you explain your approach to trade. Very logical and very direct, very specific. Yeah, no problem. I like how I do that too. Not to toot my own horn, but I definitely, obviously my process and how I look at things has worked for me. And I definitely have refined it to a point where I really like how it's going, for sure. What brokers do you favor to short? And what, in your experience, are the best places to find borrows while not getting totally shot on fees? I've tried shorting on E-Trade and it's not super available. Yeah. So, right, E-Trade. I mean, E-Trade's okay, but I think IB is a little bit better. I think TD Ameritrade is terrible for short selling. I can't tell you how many times people have asked me, like, why can't I have shares to short? I'm like, well, what broker are you using? And they're like, TD Ameritrade. I'm like, that's why. I don't think TD Ameritrade lets anyone use short there. Maybe I'm wrong, but when I did briefly use them, like, never did they have shares to short. So again, E-Trade's okay. IB's better. The problem with E-Trade and IB, though, is that they're first come, first served. So if like everyone uses all the available shorts they have, you're out of luck. You can't really short the stocks you want, unfortunately. SpeedTrader and Cobra are my personal favorites for short selling. However, you need a $30,000 minimum account for both, so they're a little bit more like of a high net worth broker. I use them primarily, both those two primarily for short selling. They have the cheapest borrows that I've personally found. A lot of people like Trade Zero, but Trade Zero in terms of borrow fees are just absolutely ridiculous. Not only just to borrow them for the day, but if you want to short a stock overnight, I mean, I think they charge you like 3 or 4, even like 7x overnight, which is like absolute robbery. Like, you'll catch me dead before I pay that much. Just ridiculous. Cobra's like super cheap. If I'm ever paying more than a cent or two a share for a borrow fee, like, that's expensive. SGOC was expensive today. I think I paid like 7 cents. But again, when I had like $4 or $5 a range, it was worth it. But like 90% of the borrows I pay at Cobra are like half a cent a share, a quarter a cent a share. Super cheap. Now, granted, the bigger trader you get, like if I want to borrow like 50,000 shares of a stock, paying half a cent, like that's $250. But again, if you're putting on a position that's 50,000 shares, like you have a big enough account to be paying $200 for a borrow fee. But in terms of per share, Cobra and SpeedTrader are very, very cheap, very, very affordable. And they're my favorite brokers to short. Screen organization. I have plenty of traders have one monitor divided by 16 plus charts. Is that just done manually, or is there a YouTube video you could watch to learn that? It depends on the software. So like the reason why I only use StockTrade on this particular chart, and I will just go from tab to tab, is because StockTrade software popping out their charts like that isn't necessarily the most efficient. Whereas DAS is super efficient. Like DAS is just really easy for me to make this chart really small. I can make it as small as I want, make it as big as I want. And so I will make charts a certain size that I like, and then kind of place them around my screens how I want. So 16 plus charts, that's a lot. I only have, I guess, technically 9. I have 8 charts up of DAS software on my 2 monitors here. and then I have one chart up from stocks to trade right here at a time. Obviously I can switch tabs, but it's only one chart. So again, I'll have let me pull this up. I'll do this I have this 8 different times. So on my 8 monitors here, I will have a chart. I'll have my level 2. I'll have my time and sales here. Let's get this over here. Oh no! Oh, screwed it up here. Let's get this here. I'll have it in this order. So I'll have chart, level 2, time and sales all next to each other, and I'll have 8 of them. So I'll have one here, one right below it, one right next to it. So it's almost like a 2x4, two rows, 4 columns of charts. So here's one row, or here's one column. I'll have one below me, then another row, another row here, and then another column. Hopefully that makes sense. 2x4. So 2 rows, 4 columns of charts. I'll place those all around my 2 monitors. And again, like I said, they're super flexible. That's super flexible. Allow you to just move those windows wherever you want. That's kind of how I put it all together and then organize my screens. What news sites that chat do you use during trading? Which of those would affect your trading plan in a trade? Are you keeping indices up, or is 95% of your decisions in TA? 95% of your decisions on TA on the stock. Yeah. So the only chats I have up are the breakouts and breakdowns chat. I'm still in the Tim challenge, even though I don't say much, mainly because I'm so busy, talking in this chat. I don't really have time to chat in the Tim challenge. I do have a Discord for I'm talking with Jack sometimes there. I'm talking with other trader buddies that I've met over the years on Discord. But besides that, there's no other there's no maybe news catalyst. I do have access to the breaking news chat for SCT, which sometimes I will look at. Not very frequently, but I will look at it from time to time. But in terms of that's about it. Like I said, I think the more self-sufficient you get, the less and less you rely on maybe other chats for ideas. For me, it's I know how my system works. I know how my process goes. So very rarely will you find me looking at other traders for ideas. Sometimes I will find, of course, the traders who trade most likely like me, I will like to know what they're trading. Me and Jack trade very similar in many, many ways. So a lot of times, because we're in the same chat room, I'll see what he's trading. I'll see if it's a setup I know how to trade and that I like, then yeah, I'll take the trade. But I'm not just going to follow or continually look at other traders in other chat rooms to see if I can be a degenerate and start following their trades. That's not what's gotten me profitable, So, like I said, just the more self-sufficient you get, the less and less the more and more you'll realize, the less and less you really need other people's kind of chatter and opinion. Because at the end of the day, right, like you said, decisions based on price action, technical analysis, that's really what price action is king. At the end of the day, it doesn't matter how good the news is, how bad the news is. If the price action is not showing me what I need to be seeing, I don't have any excuses. I have to follow that. So, right, price action at the end of the day is going to be king over what anyone says. Let me just check emails, make it real quick. I don't think it was put in the email list. The link. I may not have gotten on scheduled. Just watch the replay. Okay, yeah. So some people might have not, for some reason, weren't getting the emails, but yeah, I'll make sure everyone gets the archive version of this. And any questions, again, if any questions weren't answered by the time I think we got maybe a few more minutes here. If I don't answer a question, feel free to email me. I'll happily answer your questions separately at another time. Want to make sure you guys, obviously learn long term and get your questions you want answered. I could certainly design a trade tracker. However, worth asking, are there any specific sheets and challenge that are shared by moderators like yourself where I could start? Yes. So there is how I personally started. Michael Good has a blog post. For those who don't know, actually, it's funny. It's so weird me saying this. Michael Good was an old moderator in the Tim Challenge. He's still in the Tim Challenge. He's just not a moderator anymore. He's kind of, I guess, what you could say, retired. So crazy because he was a moderator for probably a decade. He's Tim's first millionaire training challenge students. He made this blog post about how he tracks his trades. When I first found this blog post, this really gave me the inspiration to start tracking my trades. And pretty much how I track my trades, is extremely similar to this blog post. So I would dig into that, watch his video. I do have my own spreadsheet that I track, but I highly recommend you just copy it. You can see it on all my trading cap reviews on my YouTube. Um, I do offer the calendar for $30 on one of my videos. If you wanted that, you can email me it, and I'll give it, and I can show it to you or have you purchase it. But I much prefer if you just copied it, just because it's so much easier. I think not easier. You're going to learn more if you learn how to use Excel yourself. That's just my personal opinion, but some people do just want my spreadsheet anyway, just to learn from it in terms of like the calendar. So if you're interested in that, email me that. I can send you that link as well. So what's my email? Best email for me is kylecw2@gmail.com. I should type that right. Yep, that's my email. When discussing borrows, I'm under impression that you have to reserve borrows before you're going to short. I watched Jack 2. Do you do that this week on Carve? Are you often getting borrows on stuff you don't end up shorting? How often would that happen to you? Yeah, so that was a struggle. When I first opened up Cobra, I definitely had to get over that of like getting used to paying and not even being able to get short. Like I'm just paying to have the shares for the entire day. Yeah, sometimes I will pay for borrows and not use them. But I would say that's like maybe 10, 20% of the time, maybe even 5% of the time in a hot market. Like generally I'm not just borrowing every stock on my watch list. I'm only going to borrow if it's showing me what I want to see. And I can tell that within the first, 30 minutes of pre-market or even first 30 minutes of the market open. So very rarely will I pay a borrow and waste it. But then again, like I said, Cobra is so cheap. Like I'm totally fine with paying $50 and having go to waste, because if I'm willing to take like a 2, 3, 4 grand loss as an average loss, paying $50 or $100 for a borrow is not a big deal. Granted, in the beginning it was tough. Like granted, in the beginning I had to use this paying $10, $20 for borrows and being okay with not using it. But again, just practice over time. You get pretty used to just dealing with it. And again, more times than not, if you end up using the borrows and it makes you money, like that borrow was well spent. Like I said, I paid like 7 cents a share on SGOC, so I paid like $300. I think I borrowed like a few thousand shares of 7 cents. But again, I made like over multiple dollars a share and made $4 grand on it today. So, paying $300 for $4 grand profit is absolutely worth it every single time. So something you just get used to. Thank you so much for sharing your knowledge. Yeah, absolutely. All right. I'll go on for like 7 more minutes here unless we're all done with questions. Last chance for anybody. Okay, Kevin. Is Cobra ever a broker you go along with? Sorry if I missed this. Or would you say you long with it the most? I long with E-Trade the most. There's been certain occasions that I have long with Cobra. But when I think of those certain occasions, I really don't know why I did. Like, it wasn't like as if I needed to long with Cobra. I just did, like, randomly. I could see myself longing at Cobra if, for some reason, say my E-Trade account wasn't big enough. Like, say I was really convicted on a long, and I wanted to take a very large position, but my E-Trade account isn't big enough because my Cobra account is way bigger than my E-Trade, then yeah, I could see myself longing at Cobra. But, I mean, 99.9% of my longs are going to be at E-Trade, just because I've just kind of designated that broker as an E-Trade long, or as a long broker. Also, too, E-Trade's commissions are, for OTCs are like $5 in, $5 out. Whereas Cobra, like if I want to long some like 5-cent stock, and they're charging, and the commission structure at Cobra is like the same way that I pay per borrow for borrow fees, I also pay per share for commissions. That's like a sub penny per share in commissions. The last thing I want to do is like try to buy 1 million shares of like a 3-cent stock and pay thousands of dollars in commissions versus me paying $5 in commissions at E-Trade for one entry or one order. So that's why E-Trade is primarily my long, or my long broker, I should say. Kevin asks, is Bitcoin going to break below 30K? Honestly, it's quite possible. I've talked about this with Matt quite a numerous amount of times with Crypto Rockets, the subscription that he mainly started a few months ago, but I'm part of it. I do monthly webinars there. We actually have one next week. It's certainly possible. Bitcoin has been much, much weaker than I've expected for this amount of period of time. But the impressive part, though, is that every time it's broken 30K, it's gone to like as low as 29, and then it's getting bought right back. So, yeah, I do think it could make new lows. It could certainly go down to 27, 26, 25. But I also think that it won't stay there. Maybe it'll stay there for a few weeks, maybe stay there for a few months. But if you don't know me on crypto, I'm pretty bullish long term. So I do think you might get an entry below 30K. Maybe not. We'll see. But it definitely is weak right now, the whole overall market. Any last questions, guys? We got 5 or 4 minutes. And I will. So in terms of the you guys getting the archived version, I will make sure this whole video gets saved. I will then download it to my computer, and I will either upload it through like a private YouTube link, or if I can get it on Vimeo, I will just send it to you directly through Vimeo, stuff like that. So, and again, I have my email there. So for whatever reason, if the email didn't go through for me sending the archive, please email me. I'll make sure you guys get the archive version. And as how long the archive version will take, I imagine it'll take maybe a couple days to maybe a couple weeks to make sure because I think it takes at least a few hours or a day or two for the live stream to like fully like cement the recording, and then I can download it from there and upload it, and then it'll be good to go. Kevin says, I'll meet you one day, brother. Thanks for taking the rapid fire questions. Yeah, no problem, Kevin. You got some good questions. Thank you for bringing them today. Old Ninja says, do you watch the options volume to get a read on equities? No, I know a lot of people do that. I personally don't. I see options as like options are a derivative of stocks. So I would think that options volume is happening because of a particular stock, not the other way around. I understand that people do trade off stocks off that reason of like, if they see a certain amount of options volume, they might think a move in a stock is happening. So I totally get that. But I don't trade options or watch options nearly enough to really make that call or even watch like I know what I'm watching in a way. So no, I don't do that. One more question, anybody at all? If not, we can close it out. I'll give it a few more seconds here. All right, I think unless another one pops up anytime soon, I think we're good to go. Thanks so much, guys, for coming to the webinar. Thank you for supporting Kejo. My buddy who just started the brand really was really excited about it. So he's happy you guys bought and happy I helped him, get some purchases. So thanks so much, guys. You'll be getting an email from me, like I said, about the archived version of this webinar. And if you don't, please feel free to email me with the email I put in the chat. And I will hopefully catch you guys next time. Maybe do a webinar like this in the future. We'll see how it goes. But again, I do a webinar every month in breakdowns and breakdowns. So if you are interested in that as well, me, Jack, and Mari would be more than happy to have you in there and really get to it and help you guys become profitable traders. So thanks so much, guys.